Okay, now we are going to see the importance or the relevance of management accounting in an organization. First importance is it increases the efficiency of the organization. Suppose you are available with an end goal which has to be achieved within a short span of time, it will boost up or it will automatically create some kind of urge within yourself, isn't it? Likewise, in an organization also, if they want to achieve a particular target within a specified time limit or within a specific target or standard, which will increase the efficiency of the organization or a particular department. Okay, so in simple terms, as we are having a target or a standard which has to be achieved, we will be trying to achieve or complete that particular task within that set target limit or a standard limit. So it will automatically increase the efficiency of the organization. So for example, if the standard cost which I have to accomplish is 100 rupees, I'll be trying to reduce my overall cost within that 100 rupees framework. So if I'm able to complete the particular task within a with a cost of 90 rupees, it is increasing my efficiency, because I am able to achieve a cost efficiency of 10 rupees. The second point is proper planning. This is what I was discussing till now. The entire slides was discussing about the facilitation of planning through the preparation of budgets, forecasting statements. All this will help the organization to plan, whether it is a short-term plan or a long-term plan, which will help the organization plan their course of action. Then the third importance is maximizing the profitability. We are able to maximize the profitability through different mechanisms. If you are able to increase the price, or if you are increasing the price, we may be generating more profit. But it's not practically possible. Why? Because if we are increasing the price of a product, so for example, if we are increasing, suppose we are Colgate, our company's product is Colgate, and the current market price of our product is 50 rupees. So with the objective of increasing the profit, we are going to increase the price from 50 to 80 rupees. So automatically what is happening? We are getting 30 rupees of profit from each unit of product what we are selling. But will we generate profit on a longer period of time or a longer uh, or on a continuous basis? No, it's not possible. Why? Because the customers are available with different alternatives. They may switch to Pepsodent, they may switch to Anger, or they may switch to different brands which is available in the market. Why? Because we may be overcharging the customers. So what we can do for increasing the profitability is to reduce the cost what we are incurring for producing that particular output. This is what is happening in costing, and which is getting an additional help through management accounting tool, which means that we are able to control the cost, minimize the cost, and optimize the productivity, and thereby the cost benefit what we are generating is getting transferred to the customer. We are able to it can be achieved through it can be achieved through two different ways. First one, if you are able to minimize the cost of production with the existing level of price what we are charging from the customer, we are able to increase the profit margin. In another sense, if you are able to reduce the cost of the product or cost of production in a very marginal way, we will be able to reduce the price of the product what we are charging from the customer. If you are able to reduce the price of the product, if you are able to offer a if you are able to of the product at a competitive rate than from the competitors, automatically the customers will be switching from our competitors' product to the product what we are offering. So that all also automatically contribute to the increase in the profitability. Then the fourth importance is the improvisation of service to the customers. Here it is a comparison of it is a combination of all the activities which is associated with the management accounting. As we are able to control the cost, as we are able to have a control over the activities of the organizational departments or the employees, we are able to serve the customers in a better way, whether it is with respect to the quality of the product, or whether it is with respect to the price of the product, or whether it is respect to the satisfaction what the customer is deriving out of the consumption of our product, all in an pervasive or in a complete manner, we are able to serve the customers in an improvised way. Then, the fifth importance of management accounting is effective management control. The control is being facilitated with the help of standards or the budgets what we are preparing at, at the initial phase. So, we are preparing a standard or budget, and based on which we are implementing or actually doing our course of action. So as we are having the target or standard, we are able to effectively manage the activities or a control is being facilitated. Now we are going to see the limitations of management accounting. The first limitation is accuracy is not being ensured. Why? Because in management accounting we are not only using the actual information which is available from the financial accounting, but also we are using the forecasted informations which are being or which are available from the cost accounting data. So as we are using both actual and forecasted information in the process of accounting or management accounting, the accuracy is on a doubt, or there is a possibility of some kind of default or problem in the information which is derived out of management accounting. Then the second limitation of management accounting is it's a tool in the hands of management. As I told you earlier, it's not going to replace the managers. It's only a facilitator. It is providing a processed information or different kinds of outputs or meaningful information is only being given to the managers. It is up to the managers to take some decisions based on the information what we are getting out of management accounting. So it is a kind of tool which is there in the managers to take informed decisions. Then the third limitation of management accounting is it is having the strength and weaknesses of the input, that is the management accounting is using the information from both financial accounting and cost accounting. As we are using the information from financial accounting and cost accounting, it will have the output information or the processed information out of management accounting will have both the weaknesses and the strength of the management accounting and cost accounting information also. Then the fourth limitation is that it's a costly activity. Why? Because we may have to install different softwares, we may have to recruit more personnel or employees to the organization, we may have to increase or we may have to improve the efficiency of the existing accounting mechanism. So or different or n number of activities are aligned with the installation of management accounting within an organization. So it will improve, sorry, it will increase the overall cost of the organization. Another limitation of management accounting is lack of knowledge and understanding. It's it can be considered as a comparatively new discipline or new area of subject where we are combining different disciplines or subjects like statistics, economics, engineering, management, and so on. So the problem here is that if a person is lacking in any of these areas, or if a person is very good in statistics but he is not that good in accounting, so there is a problem, or there may arise a problem of proper implementation of management accounting. So a person or a combination or a group of different persons who is having a good or a handful information or good processing skill on different areas which are associated with the management accounting is vital or very essential. Unless and until we are having a group which are, or which is very good in different streams which are associated with the management accounting, we may not be effectively implementing management accounting in our organization. Another limitation of management accounting is psychological resistance from the part of employees in the organization. So, for the existing employees, they may be adjusted, or they are comfortable with a particular kind of activities or a particular level of activities. So, if the organization all of a sudden asks the employees to make a shift from the existing pattern of activities to a new course of action, there will be huge resistance from the employees. Obviously, that will happen. In the case of management accounting, there will be excessive resistance. Why? Because we will be fixing a target, we will be fixing standard, we will be trying to improvise the activities of the employees. So there will be ample or excessive amount of resistance from the employees. So that increase the burden of the organization in the implementation of management accounting. So it can be considered as a major limitation. Then the big limitation is the management accounting is still in its evolutionary stage. Till now, it has not reached its completeness. It is evolving, it is adding up, or it is continuously making improvisation. As a subject itself, it is improvising only. So, the management may come across different difficulties by the implementation of the or while they are implementing or while they are using management accounting tools in the managerial decision making process, they may come across different difficulties. Why? Because as a subject itself, it is improvising or making evolution.